This is Dr. V. Srinivasrao, lecturer in Commercial Management in PB Siddhartha College of Arts and Sciences. Now, I am giving the information regarding the auditing subject. Auditing, what is the meaning of the auditing? Auditing means examination of accounts, verification of accounts with relevant vouchers and documents is called as the auditing. The term auditing is derived from the Latin word adire, which means to hear. Auditing begins where accounting ends. Auditing means examination and verification of accounts prepared by an accountant of the concern is called as the auditing with relevant vouchers and documents. Right. Auditing begins where accounting ends. Examination of the accounts. Next. What are the main objectives of the auditing? Objectives, primary objectives and secondary objectives. Auditing is required to examine the accuracy of the books of accounts. Arithmetical accuracy of the books of accounts prepared by the accountant of the concern is called as the first important objective of the auditing. To express opinion on the financial statements. That means with the best of knowledge of the auditor, examine the transaction with relevant vouchers and documents. He has to give the report. The secondary objectives are detection and prevention of the errors and detection and prevention of the frauds. Then, what is the meaning of the error and meaning of the fraud? Error is a mistake. Error is a mistake done by a person without having any intention to deceive the funds of the other. Error may be the mistake done by an accountant or a person due to the negligence, due to the innocence. Right? To examine the accuracy of the books of accounts. The auditor has to examine the accuracy of the books of accounts, vouchers, and other records to certify that. What are the accounts he has to examine? Trading profit and loss account discloses the true and financial fair view of the profits or loss for the financial period. The balance sheet on a given period is particularly and properly drawn up to exhibit a true and fair view of the state of the affairs of the business. Then, therefore, the auditor should undertake the following steps to do the auditing work. Verify the arithmetical accuracy of the books of accounts. Verify the existence of the value of the assets and also liabilities of the company. Verify whether all the statutory and legal requirements on maintaining the books of accounts has been compiled with. Next, what is the meaning of the error? The Institute of Chartered Accountants of India defines an error as an unintentional mistake in the books of account. Unintentional means no intention, without any intention. Right? Errors are the carelessness on the part of the person preparing the books of accounts or committing mistakes in the process of the keeping accounting records. Error may take place. The person, those who doesn't have the command on the subject, command on the doing the work. It may be innocence, maybe the negligence and what. But here, the person doesn't have any intention to deceive, to misappropriate the funds of the other is important in case of the errors. Next, various types of the errors. What are the various types of the errors? Errors are 5 types mainly. Mainly 5 types. The first one is the error of commission, error of duplication, error of compensation, error of principal and compensating error, principal, error of commission and error of omission. Then the first error is error of omission. What is the meaning of the error of omission? Omission means the transaction completely forgotten without recording the entry. That is called as the error of omission. Then what about the error of commission? Error of commission means error takes place without having the thorough knowledge on the mathematical and also the balancing ideas. That means wrong postings, wrong balance carried down and forwards, and wrong additions, subtractions, and brought and carry forward to one page to another page leads to the error of commission. Omission means forgetting of the recording of the transaction. Commission means clerical error, error of duplication. It is the quite reverse to the error of omission. Omission means without recording the transaction, completely leaves without writing in the books of accounts. Error of duplication means the same transaction will be recorded twice or 2 times. That is called as the error of duplication. This is also one of the errors occurred in the books of accounts. Then a careful, proper attention and verification, these problems can be detected. The next one is the error of compensation. What is the meaning of the compensation? One error, the commitment, the involvement of the one error maybe leads to the occurrence of the another error is called as the error of compensation. The next one is the error of principle. That means error was committed against the principle. That means whenever we have to give the debit to the one aspect, but it was given credit completely against principle. That is called as the error of principle. These errors are detected and rectified by an auditor whenever he verified transaction-wise checking and verification is possible. The next one, fraud. What is the meaning of the fraud? Fraud is a willful intention, a willful misrepresentation of the transaction in the books of accounts by the dishonest employee to deceive somebody's wealth or income. That is called a fraud. The error was committed by the persons without any intention, but here a strong intention to deceive the funds of the others, that is called. The person, those who are doing this type of the fraud, having a lot of knowledge about the subject, a lot of command on the subject, how and when it has to be takes place. Thus, detection and prevention of fraud is of great importance and constitutes an important duty of an auditor. Error may takes place without any intention to deceive the funds of the others, but here in the fraud may takes place with any strong intention to deceive, to misappropriate, to make the unauthorized deduction. How these frauds may take place? To minimize the receipts or income levels and maximize the expenses and unauthorized deductions regarding the cash balances. These all are some of the occasions and circumstances which may take place in the form of the frauds. The next one, types of the frauds. How these frauds has to be taken place. Misappropriation of cash, misappropriation of the goods, and also the manipulation of accounts. Manipulation of accounts. That means misappropriation of the cash. That means cash inflows and also the outflows. Cash inflows and outflows. Misappropriation, likewise, what I given the information now. We have to, the person, those, the fraudulent person may minimize the cash inflows and may shown as the excessive of the cash outflows and wrong balancing of the cash, which may be he may use the cash for his personal use also. The next one is the misappropriation of the goods. The goods may be used for the personal purposes and the stock may be involved in the personal and unauthorized and unofficial manner. And manipulation of the accounts. The accounts may be the variance. It may takes into picture. The next one, that is the how we have to identify these frauds and errors. This is possible. The error may be detected, error may be verified, error may be rectified by following the various accounting techniques, by observing the various transactions. If one transaction is missed, that comes under the head of the error of omission. If the wrong posting, wrong addition, wrong subtraction, wrong balance or forwarding, and the turning of the one page to balance transfer to one page to another page, it comes under the head of the error of commission. Duplicating error. The one transaction is recorded 2 times and duplicate. It maybe comes under the head of the duplicating error. And the next one is the error of principal. Instead of giving the debit, we may give the credit. That comes under the head of the error of principal. Error of compensation. Compensation means we given the wrong debit or wrong credit to a particular account and also that particular transaction. To settle that particular account, we have to give the wrong debit to wrong credit. That means one error may be committed or leads to the making of the another error, that is called as the error of duplication or duplicating error. These all are the errors. But here, fraud. The fraudulent person, what is the difference between the person who did the error and those who involved in the fraud? That is, the fraud means the person have the high level of intelligence and also he search for the circumstances which may be suited to him to get the required things. That is called as the fraud. Fraud means a willful detention, a willful intention, a strong desire to deceive, to misappropriate, to hand over the cash and also the whatever it may be the other wealth comes under the head of this fraud. Frauds may be the many types. When an auditor may be in the person, after the thorough verification of the transactions, postings, the error may be detected and rectified. But whenever the detection of the fraud and the severity of the fraud only, the auditor can be detected whenever the high level of the depth investigation and also the careful and thorough examination of the every transaction with relevant vouchers. Whenever the fraud maybe takes place, he also made the fraudulent person also prepares the entire scenario in a proper, according to his convenience, and the fraud detection may not be that much of easy, where the detection of error may take place. The fraud may be the many times or various types. Misappropriation of the cash means showing the excess of receipts, excess of expenses, minimization of the income, and also the goods may be, stock levels may be decreased, and accounts may be manipulated, and unauthorized deductions may take place. These are the some of the objectives of the auditing. Thank you.